I went on TV and challenged anybody. Pomp and Jason and I challenged anyone in the world. We will take Bitcoin for the next 10 years. You take the S&P, $1 million charity bet, December 6th, 2018. No one would take it. Crickets.
In this interview, Mark Yusko talked about when we could expect the Bitcoin and crypto crash to end. He talked about all the macro factors that are affecting cryptos right now and said that he thinks Bitcoin is the new digital gold. He then talked about his predictions for Bitcoin and the crypto market for 2024, and he also looked at several other price models like Plan B's stock-to-flow model. Overall, he sounded a lot more bearish than other analysts, and that's why it's important to look at his analysis. Also, I'd just like to remind you that we're giving away $100 to a random subscriber at the end of this month. To take part in it, all you have to do is subscribe to our channel, turn on post notifications, like this video, and leave a comment in the comments section below. Good luck. Now, let's look at his interview.
There is a logic to the up move of the cycle being smaller each time. Right? It's the law of large numbers. In the 2009 to 13 run, we were a science project, right? There was no there. There was very little participation, very little volume, a lot of manipulation, and in particular, that big price spike. In hindsight, most of it was manipulation, so it wasn't real. So when now people look back at that and say, "Oh, well, we should go up 40x," well, no. You can't manipulate a $600 billion asset the way you could manipulate a $6 billion asset. Just can't do it. So then you go to the 2017 cycle, and it was a 20x move, and everybody's like, "Oh, well, we should at least go up that high in the 2021 move." Like, well, no. Again, half the size of the market, and so there's a natural logic to me that if we go from 1,000 to 20,000. Okay. That's a 20x move. And we go from 3,200 to, 70,000. That's actually coming close to that same type of move. And the idea that we look back to that 13, that was just price manipulation at Mt. Gox, it just doesn't make any sense. So I think the cycle is going to be with us forever. And it's because of the way the halving rewards work. And Bitcoin is the king, right? All these other coins, all these other projects, they're all related to the flows into and out of Bitcoin. And that cycle certainly impacted by macro factors. And, we can make the case right now. You and I could make a really strong case for why Bitcoin is digital gold. Right? And that gold has been the perfect store of value over long periods of time relative to the dollar. But that doesn't mean that you can't go for long periods of time where it goes the wrong way, right? The money supply expanded from 2011 to 2019, but the price of gold went down. It went from 1,900 to 1,000. Why? Well, there's all kinds of reasons. JP Morgan spoofing the price of gold and all kinds of other things. But ultimately, over the long period of time, if you zoom out 20 years, 30 years, 40 years, 5,000 years, for 5,000 years, an ounce of gold bought a fine person's suit. It's a perfect store of value. And if you look over a long period of time, right? Everybody says, "Oh, but the last 6 months, Bitcoin's down, money supply's up." Well, right. But zoom out, go back to 2 years ago, money supply went up 50%. Price of Bitcoin's up a little over 50%. It's pretty logical. If it's digital gold, and gold is supposed to be the store of value, and there's money migrating from gold into this digital asset, it's going to play that role. It's also not surprising that for the first time in 13 years, the Fed is constricting the money supply. So assets that are linked to money supply, gold, digital gold, might be affected. So 100% agree there will be impacts by other factors, whether that's new capital coming in from institutions. That's one narrative that, that's going to get rid of the cycle. No, it's not. Institutions are just as dumb as retail investors. right? The history is replete with examples of buying tops and selling bottoms. They are not like these disciplined, following funds that always just keep adding to the asset over time. They puke it out at the bottom, just like everybody else. It's the difference between price and value, right? The value of any asset is determinable, right? Whether it's the value of this shirt that I bought, or whether it's the value of this building I sit in, or whether it's the value of a company like Amazon, which is not really a company, it's a network, right? Amazon doesn't make stuff. They match buyers and sellers and take a cut. Now they do some logistics and other stuff, and I guess they make some knockoff products. Bottom line, they're a network. Same thing with Apple. Apple, yeah, they make stuff, but no. The network effect is that you and I have a phone and we text back and forth and we buy apps. That network effect grows the bigger the network. So the Bitcoin network is determinable. We know how many nodes, we know how many users, we know how many wallets, we know how many transactions, we know the size of the transactions, and we can plug all this stuff into a Metcalfes Law model, and we can actually get a curve. And that curve can tell us the value. But people don't care about the value. People care about the price. People care about the price. Like if you and I trade 100 shares of Microsoft stock, the price that we see on our phone is the price. But if I had 1 million shares of Microsoft, that was not the price. You would not pay that price for 1 million shares. You would pay a much lower price. And if I had 100 million shares and tried to sell it, it would collapse the price. So the same thing is true with Bitcoin. If two people trade, 25 sats, it's not going to move the price. If people try to move a large amount, it will move the price. And what happens is, if you think about value accreting very slowly, the price follows that value until it gets high, and then speculators come in and push it higher. And then the gamblers come in and push it higher. Then the levered gamblers come in and push it higher until we reach December 2018, right? 17, where the value based on the network number was 10,000 and the price was 20. There's no question it was going to go back to 10, but worse, it always goes through fair value because people get afraid and then they sell. And we went all the way to 3,200. At 3,200, it was a screaming buy, right? I mean, I went on TV and challenged anybody. Pomp and Jason and I challenged anyone in the world. We will take Bitcoin for the next 10 years. You take the S&P, $1 million charity bet. December 6th, 2018. No one would take it. Crickets. One guy, actually, I won't say who, said, yeah, I'll do it. And his son was like, no, you will not. No upside for us. We're an asset management firm. If we win, no, we're not doing this because we might lose. Good thing, because we would have crushed it, right? We're up 10x and the S&P is not. But the thing is, today, or go back to November. In November, the value based on that same model, 32K. And we got to 69. That was dumb, right? That is greed. That is leverage. Then it came out and we went all the way down. We hit 26 the other day. That's below fair value. Now, is 26 the ultimate low in this cycle? Or do we, now we're hovering right around 30, or do we have that one more puke, which I'm afraid of, where we get to that really undervalued level where you can back up the truck? If the value of the network is following Metcalfes Law and the participants are either paying too much or too little, which will eventually mean revert, we're going to follow that curve. So that should work. And so in 2014, I wish I could give the guy credit, but I can't remember his name. This guy published the original Metcalfes Law curve. And he said, this is my estimate. And he nailed it, right? In 2014, he said on November 6th, 2017, the value of the network would hit 10,000. He was off by 4 days. November 10th, it hit 10,000. Okay. And that same curve went out into July of 2022 and said it would be 100,000. Okay. That was the original curve. Now I'll call him a friend. We're not buddies, but he's my friend, Tim Peterson at N Squared Crypto. He said, well, this guy's decay factor is wrong. It's not high enough. And so he did a new model, which I love and the one I use, that has a different decay factor, because every parabolic curve has breakage, right? There's people that come into a network and then leave. And that decay factor is real. So you can't just say everyone that comes into the Bitcoin network stays forever. They don't. So some come in and try it and then they leave. So his decay factor basically says, is where I get that 32.33. It says today, right? 32.33. And it says 100K at the end of 2024. Now, the other model that everybody uses, right, is stock to flow. And I love Plan B, and I thought his model was great. And the idea of scarcity is beautiful.